Joining us now is Mike Wilson. He remembers. You wouldn't know it from that picture we showed, though. He looks like he's about 22. Chief Investment Officer, Chief U.S. Equity Strategist for Morgan Stanley. We had Tom Lee on. He's at 6,600 possibly by the end of the year. Have you? I don't know what you are at this point. Last time that you were on, you were concerned, I think, a little bit. Are you concerned, or are you? I can't even say those words together. Cautiously optimistic or optimistically cautious?
Well, good morning. I think what we're trying to do is navigate what's a bear market. We're in a bear market. I think it started a lot earlier than people are suggesting.
Before the tariffs.
Oh yeah, I think it started last summer in a lot of areas. We navigated a risk of a recession. The Fed did a good job of cutting rates, and we had a big rally into year end. But then we just got overcooked, and the fundamentals have been deteriorating for quite a while. So, our main message to clients right now is, first of all, we're not focused on 12-month targets. We're focused on how are we going to navigate the next 3 to 6 months. How do we take advantage of that? I think this correction is very well advanced, both in price and time. And I think that's the most important thing to observe, which is we've been correcting in many areas for almost a year. Okay, and that's important as a technician and somebody trying to navigate the markets. Markets are ahead of the fundamentals. They're always ahead of the fundamentals by 6 to 12 months. And that's what we're trying to figure out. We don't want to get too bearish at the lows. So last Monday was a clear capitulation day, right? That was the moment of recognition that, hey, we may be going over the edge here on a recession. And we priced a lot, right? 4,900, 4,850 was kind of a level that we've been kind of searching for. We found that level. We've had a 1,000-point rally, as you mentioned, in 2 days, okay? So now we're stuck in a range. Now the markets are going to do what they always do. They're going to be volatile until we have clarity on how deep this growth slowdown is going to be, and then what does the recovery look like coming out of that.
So we didn't have a closing low in bear market territory for the S&P. We did not. But did we get there intraday? We got close.
Well, we definitely got there intraday, but I mean that's sort of semantics to me.
Okay, then to watch what needs to make a bottom? What is it? The Russell? Is it the?
Well, first of all, we're navigating what I think is going to be a very tricky trading environment, probably for the next 2 to 3 months at a minimum, because for all the reasons you've been talking about and everybody's talking about, we don't really have an idea yet. Okay, so tail risk on recession has gone up. We're at a 40% chance, maybe higher, who knows? And until there's clarity on that aspect, which, by the way, is not just a function of tariffs. Tariffs, to me, is kind of the final blow to an economy that was already weakening for a period of time. And we can talk about those things. So the market now has to navigate this. And we also have a Fed that's on hold. Another thing that I think is different than what was going on last fall, where they were being very generous with stimulus. So we're just sort of trapped in.
They're on hold because of the tariffs?
That's what they're telling us, right? They're telling us that they are still worried about inflation, mainly because of the tariff risk.
We had good numbers last week on
That's
inflation.
Right. And so we'll see, but they're going to be slow on the draw. And that's a very unusual position for equity investors to be in. Equity investors are used to being sort of, benefits bailed out, so to speak, from the Fed or from fiscal stimulus. And right now, both of those are on hold. And so we're kind of flying without a safety net, and earnings have already been deteriorating for a period of time.
You almost painted that same scenario a couple of years ago when you were bearish for too long. You thought earnings were decelerating and maybe we were going to have a slowdown back then. And that didn't happen because, as you just said, the Fed handled it with some rate cuts. You don't think we're not going to get bailed out this time? Well,
it's different in that period too, Joe. So we look at the internals of the stock market. And the internals of the stock market have been telling us for a while that this growth slowdown is much more dangerous or negative than the one we saw in 2022. Don't forget, in 2022, growth was actually really good. And that was the reason why the Fed had been raising rates. So growth was good. Now we have growth not so good, and the Fed's no longer cutting.
We're up 60% from what I was thinking. Remember my bet with Larian? That was at 3,600, and I said it was going to go above 4,000 first. He said it's going to test the lows, and one day it tested the lows, and he won.
That's right.
But we were arguing at 3,500. We got over. What was the high on the S&P?
6,100. At 3,600, we did flip bullish, as you recall. In the fall of 2022, we caught that low really nicely.
60% from there, 70%.
Yeah. I mean, look, the point here is that we're now in an environment that is obvious. Okay, 6 months ago that was not obvious, which is why markets were priced for too much goodness at 6,100.
Well, you think we've seen the worst?
I think we've seen the worst of the momentum. That's what we wrote about this morning. Is that we've probably made the momentum low. Right, the capitulatory low for this correction, whatever it's going to end up being, whether it's 20%, 25%, or whatever.
Do you think it's all uphill from here?
No, I think it's going to be a lot of testing. I think we're going to, now the markets have, the patient had a heart attack, okay? Now the patient has to recover. That's different than we saw last fall or last summer, where we had a very short sell-off in the summer. We didn't create a lot of damage. Now we have some more damage, and we just got to work through that. And that's the opportunity at the stock level. Okay, so if you look at some of these cyclical groups, I mean, like semiconductors are down 50% from last summer. Okay, most of that damage happened way before the tariffs happened. So this is just a wake up, like this just now.
Right, but you're looking at this in a very